So now, if cryptocurrency prices are falling, it could be a great time to buy good assets. And this is where you have to decide, is cryptocurrency a good asset to you or not? And this is one of those things where it's speculative, right? Because cryptocurrency hasn't proven itself the way that real estate has. It hasn't proven itself the way that the stock market has. We don't know what's going to happen with cryptocurrency in 5 years or 10 years or 20 years. So it's that speculative part that everybody still has a question mark on. And the haters of crypto are saying, I told you so, crypto is going to zero. The crypto enthusiasts are saying, buy the dip. And this is where you have to now make a belief because we don't have the right answer. Now, I believe in cryptocurrency. I think that there's a lot of value in crypto. I think there's a lot of value in the blockchain technology. I think there's a lot of things that you can do with it, but I also understand that it's speculative. I also understand that it's risky. So I invest in cryptocurrency. However, it is not a major part of my portfolio. I invest in 5 things. I invest in my business and startups. I invest in physical real estate. I invest in stocks. I invest in cryptocurrency, and then invest in physical gold. And so I understand, okay, cryptocurrency is there as part of my speculative part of my portfolio. If it went to zero, it wouldn't affect me really that much. And I also understand that if cryptocurrency went to zero, I would be fine. However, I don't think cryptocurrency is going to go to zero, which is why I keep investing in cryptos. However, I do think that some cryptos will go to zero. I think that there are a lot of bad cryptocurrencies out there. I think there's a lot of crap cryptocurrencies out there. I was making videos about this when cryptocurrency was hitting its all-time highs in 2021. I said that we are seeing the growth of all these crap coins that I don't believe in. And so I think that is a part of the process, and I think you're going to see a lot of volatility. I think that we're going to go even lower. However, this is where now you got to make the right decision for yourself and understand how it plays a part in your portfolio and understand the long-term horizon. A part that I'm more worried about than all of cryptocurrency going to zero is the crypto exchanges, because there's a lot of crypto exchanges that fall under that traditional tech sector that have been a byproduct of this bubble economy over the last couple of years, and now they're struggling raising more cash. They're struggling staying in business. And the thing that you want to remember here is that when your cryptocurrency is on an exchange, you don't own it. And so if an exchange that you're using goes under, or if they lock you out, there's nothing that you can do. So if you are using an exchange to buy a cryptocurrency, make sure you take your currency out of the exchange. Use an actual wallet. A cold wallet is the best thing that you can do, which is a USB drive. I use a nano ledger. You can use a hot wallet at the very least, but you need to take your cryptocurrency out of the exchange. That where exchange doesn't control the cryptocurrency. The thing that you want to ask yourself now, if you want to be a crypto investor, is why are you investing in this cryptocurrency? What value does it actually provide? Does it allow you to transact easier? Does it allow you to do things, build smart contracts? Does this technology allow you to do something that does not exist? Because now what you're doing is you're not just investing in some random cryptocurrency that you hope will 10x because it has a lot of hype behind it, but now you're investing in a software. You're investing in a technology. And that's very different than what most people's perceptions of what cryptocurrency is, because the reason why I have so many haters on the cryptocurrency side is because most people assume that it's just a bunch of coins with dogs and cats on it that people are throwing their life savings into. And that has existed. And the reality is that's where all the crap is. But if you want the real value, you have to look at the blockchain, you have to look at the technology, and you have to look at the use. If this technology can provide real use as a software, if it can change the way that you transact, if it can change the way that you do business, now there's value here that people and businesses can use. And that can create an investment opportunity, but you have to do that research and understand what that value is. There is one X factor though, and that's government regulation. Because now as cryptocurrency has become much more widely adopted and much more widely used, the government now wants to get more involved on the regulation and oversight and monitoring it, because they want to prevent scams. They want to avoid some of the bad trust and bad things that can happen with cryptocurrency. And this is where we don't know where this regulation will go. Just a couple of days ago, the last week of June, the founder of Cardano, the cryptocurrency ADA, went in front of the United States House and talked about why there needs to be more regulation on cryptocurrency, because if you do regulation the right way, it will make people feel more safe and more comfortable investing their own money into cryptocurrency, because they don't have to worry about being scammed. They won't have to worry about all these bad exchanges. They won't have to worry about all these bad coins. However, if the regulations go the the wrong way. If it gets overly regulated, then that can very much hurt the cryptocurrency market, because now it becomes harder for people to buy and sell cryptocurrency. It becomes more difficult for people to develop technologies with cryptocurrency, and it becomes much more harder for people to actually use and develop the cryptocurrency here. This is where you have to understand the difference between a short-term and long-term thinking. I am not a short-term investor. I'm not a trader. I'm a long-term investor. And by long-term investing, I mean I look at the fundamentals, something that I believe will have value in the long term, and that's something that I want to invest my money in. I think that there's value in the blockchain technology over the long term. However, in the short term, there's a lot of factors that are going to influence cryptocurrency and the rest of the markets. For example, the Federal Reserve Bank, because now we are on this rate heightening cycle. The Fed wants to aggressively raise interest rates to fight inflation. As they raise interest rates, that pulls money out of the economy, and that makes people less interested in speculative investments. What's a speculative investment right now? Cryptocurrency. So as interest rates go up, you can expect that that's going to continue to hurt the cryptocurrency market, because one, it makes less money floating around out there. When there's less money floating around out there, that just makes asset prices go down, and cryptocurrency is one of those. And especially when it comes to speculative investments, people want a safer investment when you go through these types of rate heightening cycles. So just naturally in the short term, you can expect that if the Fed is raising interest rates, it is going to continue to hurt cryptocurrency. That's why in 2020, when the Fed started cutting interest rates and we started seeing so much stimulus, we saw billions of dollars flow into the cryptocurrency market. Now, as we're doing the opposite, as the Fed is working to raise interest rates, the Fed is working to pull money out of the system, billions of dollars are leaving the cryptocurrency markets. And this is where now you want to find the right opportunity for you, because if you believe in crypto, like I said in the beginning of this video, if you believe in the technology, you believe in the value of this thing, and you want to hold it for the long term, and you really do believe in it, well then a low price is just a great buying opportunity. But you have to remember the long-term mindset and be able to understand what it is that you're investing in. Because when you go through these rate heightening cycles, when you go through an economic contraction, you see a lot of blood in the water. You see a lot of panic. You see a lot of fear. However, no smart investment decisions are ever made out of fear, and no good financial decisions are ever made out of panic. And this is where you have to be smarter and be able to control the psychology of investing. That's why I always say that the psychology of investing is just as, if not more important than the actual education of investing, because that psychology will allow you to control your emotions. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.